Welcome back to the Dividend Diplomats YouTube channel. We're here hitting the end of February, and guess what? Dividend increases are still on fire, Bert.
Yes, they are. But before we start talking dividend increases, give that subscribe button a nice Hogan leg drop and give us a thumbs up too. Thank you, everybody. All the support. We're loving seeing our subscribers grow, so please help us out because we want to keep talking to all of you about dividend increases.
Damn right, Bert. And this week, February 16th, again, was no different. You know, back in November, we really started seeing the resurgence of dividend increases. And I gotta tell you, Bert, the 6 dividend stocks that we're here to showcase their dividend increase just proves that dividend investing is alive, it's real, and it's coming at you, brother.
Yeah, it's a great point. Every single week we get hyped up looking at these dividend increases. Why? We are trying to achieve financial freedom by growing our passive income. We personally love dividend investing. I think you've all figured that out by now.
A little bit.
One of the key components of dividend investing is buying stocks that grow their income over time. You don't have to think about it. It's easy. We always talk about how it's one of the easiest forms of passive income. That's why we get so hyped up talking about dividend increases. And man, that is why this is our favorite video to record every week.
In the words of Arnold, if it burns, it grows. or in the words of the diplomats, if it earns, it grows.
Yeah, I'm working on getting to look like Arnold myself here.
I know. I mean, he's just soaking wet right there.
Yeah,
watch out. Don't let the sweatshirt fool you.
Yeah, pop in some of that creatine we may get there.
Creatine and whey, and Bert's got a couple needles he shoots.
Stop. No, just the creatine in a way.
We aren't talking about every single increase that came out. If we were, again, this show would be a marathon episode, and honestly, our memory probably couldn't hold it, nor would you want to sit around and watch that whole thing. So we're going to talk about 6 massive companies.
Yeah, we are very pumped up about here. One of them is a local hometown hero here in Cleveland, Ohio, the headquarters of the Dividend Diplomats.
CLE, let's go, C-Town, baby.
Yeah, some of them are some great retail companies. We're going to talk to you then after we get through the really new, exciting ones. Some of your nuts and bolts dividend aristocrats and dividend kings delivered as expected.
Nuts and bolts and nuts. That's what we bring.
Yeah, and some of them even sell those.
They may.
They definitely do.
All right, so the first big dividend stock on the list represents the land, Cleveland.
Yeah.
Now, Bert, what company is this?
Sherwin Williams, ticker symbol SHW, headquartered in Cleveland, Ohio. You may know it because of the LeBron mural that used to hang outside the We Are All Witnesses for LeBron. Yeah, that was right on Sherwin Williams headquarters.
Now, obviously, during the pandemic, when you're doing all the DIY projects, let me tell you, a lot of paint's being used at homes right now.
Yeah, and they are one of the best out there. I think they're the supplier of the military as well. So all those ships that are getting painted, Sherwin Williams has your back on those. But this wasn't some small dividend increase, was it, Lanny?
No, because why? What is their 5-year dividend growth rate on average, Bert?
15.5%. They are a low dividend yield, high dividend growth rate stock, which is what we like to see.
Man,
and this,
I love this company.
Yeah, this company even blew their 5-year average out of the water. Lanny, what was their dividend increase?
So again, their 5-year average is a 15% increase. Sherwin-Williams came in, currently they were paying $1.34, and they said, you know what, we're going to increase that to $1.65, 23% increase. Obviously representing LeBron's 23
it's
numbers,
very fitting, isn't it?
But yeah, 23% increase, Bert, to $1.65. I mean, obviously five-year average is 15, so they got 8 percentage points above that. But what is their current yield?
Yeah, their current yield 0.9%, which isn't the highest, but hey, if you're going to have a low dividend yield, you want to see that massive dividend growth rate. They are doing exactly what you want to see from a company that has a low yield. They grow that income because they grow their earnings, so they are returning that to the shareholders.
Yeah, again, 0.9%, below the S&P 500, but as Bert said, you're going to get that growth factor. So Sherwin-Williams is definitely a long-term dividend growth stock, a dividend aristocrat, on their way to a dividend king, actually, in 9 more years.
Yeah, so you can paint that dividend increase into your portfolio.
Paint it, swipe it, stroke it.
Yeah, then give us a thumbs up, too. I'm kidding.
But Sherwin-Williams, yeah, again, a long-term investment, because over time, that yield on your cost will increase dramatically, right?
It's all about the yak.
the YOC, the YOC, yield on cost, which, you know, a little bit of education, that is looking at your cost basis and being able to calculate what that new income is over your cost basis, because essentially you may buy in at a 1% dividend yield, but again, if it has a 20% increase, your YOC just became a 1.2%.
Yeah, that's why you got to keep an eye on it. It's not the most well-known metric out there, but it's a very important one as you're analyzing your portfolio.
Yeah, and I mean, and the longer you hold a company with all those dividend increases, I mean, I think I have so many companies where I initially bought them in that 2.5 to 4% yield, but my yield on cost now is over double digits.
Fantastic.
That's the beauty in dividend investing.
Dividend stock number 2 on the list, we're heading over to the retail sector. You bought your paint, let's go to the mall on the way back, buy some shoes as well, because the second dividend increase was FootLocker, ticker symbol FL. Man, oh man, they beat Sherwin Williams on the dividend increase front here. They increased their quarterly dividend from 15 cents to 20 cents. So that is a 33.3% dividend increase.
I mean, we're talking FootLocker. You know, during the pandemic, the height of the dividend was actually 40 cents per quarter per share. And then in August, they actually, you know, they cut their dividend down to 15 cents. And part of the November video was that, oh yeah, like dividends are back. You know, again, they reinstated that dividend to 15 cents back in the fall. And then you knew that they were on the path to keep increasing that dividend. So again, cut it to 0, reinstated it at 15 cents, another 5 cent increase at 33%.
So it's working its way back to the pre-pandemic level. We're not there yet, but this is exciting news because, as Lanny said, the dividend's coming back. Things are getting better for some of these retail companies. You're starting to see return of dividend growth once again.
You know, and I don't know if it has to do with the, you know, kind of like similar to the Pokemon craze. There's like a shoe craze, you know, to get that new Nike, to get that new LeBron, you know, that new Steph Curry shoe, or the, you know, that new Supreme model of a shoe. I mean, I know there's like that hidden market where you're trying to get that release, and I'm sure FootLocker has a lot to do with it.
Yeah, and to add to that too, with working out at home and doing more home workouts, people didn't just stop buying shoes for that sake either. It's still going, you're still exercising. And
again, FootLocker, 33% increase, halfway back to their pre-pandemic levels, and we're more than likely certain that they'll get there. Maybe not in 2021, but maybe in 2 or 3 years.
Yeah, they're working their way back, and that's the important thing here.
All right, Bert, let me hear you talk about number 3.
This is exciting. So to bring it back on this one, we noticed this trend back last year that when the dividends started coming back. So there were the pandemic cuts, which we just talked about with FootLocker, but then out of nowhere, companies just started bringing their dividend back. The dividend increases started coming back. Why am I bringing this up? The next company we're going to talk about is really the one that kicked this off for Lanny and I. This was the one that just opened our eyes and said, wait a second.
What's happening here?
Yeah, something big is happening. And then, the floodwaves just started opening here. So who is this third company, Lanny?
It's your favorite company when you're watching the Cleveland Browns and Baker and Odell and Juice, Landry. It's when you're sitting on your lazy boy, ticker symbol LZB. And again, like Bert was saying, during the pandemic, lazy boy actually was paying a 14-cent per share per quarter dividend. The lazy boy then cut it to goose egg. And then what did they do in August?
They brought it back to 7 cents per share for a quarterly basis.
And then what did they do in November?
They brought it to 14 cents.
Doubled it back.
So they brought it back to their pre-pandemic level. So now what did they do?
What did they do?
They took their pre-pandemic level and they're like, you know what? We're announcing a dividend increase. They increased it from 14 cents to 15 cents. So a nice 7% dividend increase. So man, it was a journey to get there, but year over year, Lazy Boys increased its dividend.
So think about that. Not only did they cut it down to 0, brought it back halfway, brought it back to the pre-pandemic levels. Again, every quarter they're like, hey, oh, by the way, now you're making more per share per quarter than you were this time last year. Yeah. Lazy Boy.
Yeah, fantastic stuff for all those Lazy Boy shareholders out there.
For all the Browns fans, this is the year. This is the year. JJ Watt, if you're listening to this, let's go.
Yeah, we'll figure out the Lazy Boy situation from there. Dividend stock number 4.
Bert, you got to talk about
this. This is one of my favorite companies. It's a dividend king. It's one of the longest dividend increase streaks there, and they delivered and continued that once again.
And you were accumulating shares in this company. Was it in
Yep.
2019 or 2020?
It was the beginning of 2020. We were adding it to my wife's portfolio because for the long-term dividend history, I love the industry they operate in. That company is Genuine Parts Company, ticker symbol GPC. They're
not DPG for Dog Pound Gangster.
Yeah, that definitely not that. GPC. They increased their dividend from 79 cents per share to 81.5 cents per share. That is a 3.2% dividend increase. They're not blowing it out of the water like the previous ones discussed, but they're just a slow and steady dividend king that just continues to chug along and increase that dividend.
64 years of increasing the dividend. Again, you know, Genuine Parts Company, a pretty good dividend stock to own. You know, they're consistent cash flow. You know, surprisingly, you know, cars are still needing parts and repairs and, you know, you name it.
Yeah, they're big on the secondary auto market.
They currently yield a 3.2% yield, Bert.
Yeah, and they have a 5% 5-year average dividend growth rate. So.
Yeah, so slightly below it, but again, you're looking for a 2 times the S&P 500 yield as well as multiples on top of your online savings account. Genuine Parts Company, not too bad of a dividend stock to buy.
No, then you take number 5, Laney. I think it's appropriate for you to do it.
Can you dig it, sucker? So that 5th dividend stock is a dividend king. They've had over 59 years of consecutively increasing their dividend. You know the brand everywhere. Warren Buffett loves drinking this almost, I think, one a day.
Yeah.
His Coke.
Yes, it was ticker symbol KO.
Coca Cola, baby.
So we talked about Pepsi last week. We're talking about Coke this week because for some reason the competitors announced dividend increases right around the same time.
Right. If Pepsi came in with their increase, Coke says, oh, okay, you talking to me? I don't see nobody else here, so you must be talking to me. So Coke came in with a nice, massive 2.4% dividend increase.
Yeah, you can stop the presses with that dividend increase because that one is oddly right in line with what they typically do. They increase their quarterly dividend from 41 cents per share to 42 cents per share.
Now the dividend yield is starting to swell up a little bit for Coke. I say swell because they're one of the higher yielding companies on this list that we're talking about out of the 6 companies. They actually yield 3.35% right now at current prices at just a little bit above $50 per share. So again, Coca Cola, the brands are so deep, the iconic image. I mean, we all know it, we all love it. I'm, you know, back when I was younger, I was definitely more of a Coke person versus Pepsi.
Yeah, same here. Coke here, we were always Coke growing up as well, so it's nice to see that dividend increase.
5-year dividend growth rate average is just under 5%. So again, they're not blowing the socks off. And then lately, it's been pretty modest. Again, that payout ratio is very high for Coke. You know, again, I'd like to see some sort of earnings per share expansion here. So again, not saying Coke is a great dividend stock to buy right now, but it's also not one of the worst stocks to consider buying.
No, it's just a classic foundation one for your portfolio. It's not one of our top 5 foundations, but a lot of dividend investors own them. We've always leaned Pepsi for the reason Lanny just mentioned, more earnings growth with Pepsi, more diversified products, slightly higher dividend growth. Doesn't mean Coke's bad, but we've just always preferred Pepsi.
Right. Now, and my wife does own Coke in her portfolio, you know, a handful of shares, but she was buying in the low to mid 40s, so now that it's over 50, it's kind of hard to justify continue buying the Coke stock. But if you own Coke stock and you buy Coke stock, it's a lot better than a savings account with your money sitting doing nothing.
And if you have, congrats and enjoy that dividend increase.
So far we've talked about 5 stocks. You know, first we have the Sherwin Williams with the blistering 23%. Then we have FootLocker sliding in with their cleats at over 33%. Lazy Boy with a nice solid 7% dividend increase. Genuine Parts Company with a 3.2% increase. Coke with 2.4%. Now, Bert, this last company is the big elephant in the room.
Yeah, it is, isn't it? It's one of the largest retailers out there. They battle Amazon. They're just dominating in the market. Walmart, ticker symbol WMT. This one's a boring dividend increase for us to talk about because they do the same thing every year. They increase that quarterly dividend 1 cent. So they fell right in line, increased it from 54 cents per share to 55%. That's a 1.9% dividend increase. And we talked about this in our monthly expected increase video. They're a low yielding, low dividend growth stock, which is why we typically don't buy this stock. but so many people out there, it makes such an impact on so many people's lives. It's worth talking about how Walmart is a big dividend aristocrat that's going to keep increasing their dividend.
AT&T better take note. If Walmart can do it by 1 penny, I think you can do it by 1 penny. Come on, AT&T.
Yeah, so there we had it. That was the last and the final dividend stock on our list. Lanny went through the first 5. Walmart delivered that 1.9% dividend increase. Let us know your thoughts on these. Obviously, the boring ones had the lower increases. The more exciting companies had those big, fat dividend increases.
How many of these, of the 6, do you own, and did you experience an increase? And Bert, how many do you own here at this list?
1. Yeah, I only own 1, Genuine Parts Company. I don't know why it took me so long to think about that. And what about you?
Honestly, technically, between my wife and I, we own 1 as well, but it's a very small position in Coke, KO. But again, looking at this list, it's like Sherwin Williams. I would love it if that stock price somehow dropped. I would love to have Sherwin Williams, Cleveland home-based company, in my portfolio.
Same here, but unfortunately, it has not. That's why we don't own that company, because we don't buy overvalued stocks.
Please let us know what you think. Again, subscribe to our channel if you haven't already. Give this a thumbs up if we helped provide some sort of value. Again, dividend increases is a huge and fun part about being a dividend investor.
Yes, it is, and let us know the feedback. Let us know what increases you received that weren't covered in this video. We want to hear them all, just like we got to catch them all.
This is Bert and Laney from the Dividend Diplomats.
Over and out.